Good morning, it's Harvey Jackson. Just going to get through a few news items and just talk about a few things in the market here. First off, just going to play a clip from an earlier meeting last week, I think it was. So, news cycle moves pretty fast.
Relationship as it stands right now. We are the second largest trading partner of the United States. We do a lot of trade going across the border where we're cooperating, first thing. Second, we are the largest foreign investor in the United States. $500 billion in the last 5 years alone, probably $8 trillion in the next 5 years if we get the agreement that we expect.
So, looks like maybe the Stellantis moving down makes sense because he maybe knew that this was happening.
So the date of this letter is today, and Melanie Joly starts the letter by saying that she's writing to express her extreme concern with these investment plans in Canada and in the U.S. And demand that the company respect its obligations flowing from billions of dollars of financial support extended over the decades. And then she says, while the current U.S. tariff environment is creating complex challenges, Stellantis has made important commitments to Canada and to its workforce. Canadians expect that Stellantis will respect and honor these commitments. Anything short of this is unacceptable. And then here's the key part, and I think we have this in writing for our viewers. Should Stellantis choose not to respect its obligations, we will act in the interests of all Canadians and hold the company to full account and exercise all options, including legal. So this is the real nugget in the letter that has everyone's attention. The letter does go on to lay out the case, talking about how Canada was there, the Canadian government was there for Stellantis in 2009 when it was on the brink of bankruptcy, and now expect the company to be there for Canadians.
Yeah, so the article is just talking about, or the commentary is about Stellantis pulling out of Canada and invest in U.S. And the reason I showed the ABC clip was Carney is obviously on his knees.
Prime Minister casually said.
So yeah, just Stellantis pull to shift output from U.S. sparks Canadian concern. Stellantis is moving their Jeep Compass production to Illinois from Brampton. There was a NOPA crush report that came out, and you can see here Karen Braun just put some graphics together and posted on X that you can see that the monthly crush is just maintaining way ahead of pace. There's more crushers, of course, but it was ahead of even trade expectations. And the same with the oil stocks. You're at the closer to the bottom, even though you're crushing that much more. You still actually have minimal stocks carry out. Another story just following the oil theme, but just some of these countries like Indonesia, Malaysia are continuing to find a use for some of their veg oils and putting it into some of the industrial space. Now that's still going to give us hope for the canola and finding maybe some other partners outside of U.S. or even exporting some of the the canola oil to some of those partners as well, if they're going to need some veg oil for the industrial use space to make fuel. Drought relief, and the reason I'm showing this is, some of those river valleys are possibly going to get some rain, because this is what's going on is issues with the fall grain movement with low water levels, especially in those areas that were drought stricken and still need soil moisture replenishment. Active weather, you can see Manitoba and some of the northern U.S. plains is getting some rain. Here's just the 7-day forecast. Looks like still some more rain there, but that's that bullseye that's hopefully going to fix some of those river level situations. Just a quick look at the markets. As I took the screenshot, the canola was down just a half a buck at $619. Rapeseed at $464, down 2.5. Soybean oil was up actually at 51 cents a pound. Palm oil at 44.30 ringgit, basically flat. Crude oil is up a half a buck a barrel, back up to 58.74. Soybeans trading right around that 10.09 and a half. And your spring wheats were down 3 cents, and your other wheats were down 2.5. Corn basically flat at 4.17. Canadian dollar just in the green. You can see that we're actually trying to trade out of this channel. I'm still not saying a channel trade is reason to concern. If we got into our trade up here, it's still pretty convicted that there's still some downside, especially when you see South America still adding production as of yesterday with Conab and the harvest progress in the U.S. I don't think there's a sharp decrease in the yields that maybe initially were thought, so that's going to pressure that market a little bit as well. Just looking at the canola spreads, we were down, to the 40s and 50s, but now the spread between old crop November and new crop November has narrowed up to $38, $37, $39. And the reason I'm pointing this out is because we were leaning in to get some more sales made, for November when we're in that 660 range. I'd still say if we're going to make some sales, we need to. But this chart here is just basically showing some of the spread trades or the spreads. November to January, sitting at 1370. That spread is still pretty high, and that spread seems to be holding in that area. And November to March, in the mid 20s. With a percent of carry, in the 90%. Anything above 75 is actually suggesting you should be selling it for sure. Sell into that timeline because it's going to pay your interest and some storage costs. Here's your European rapeseed. It's pulling off of the top end of that channel, and it's actually trading lower than it had been, closer to the 160 range. This week we've pulled all the way back to $126, and that's the difference between the European rapeseed and Canadian canola priced in Canadian dollars. So, when you're in those higher ranges, you could be finding some trade partners possibly. Soybean oil, basically still going sideways. The 200-day moving average is definitely creating a support floor, but it seems the 100-day is actually creating a resistance as well, so you're getting choked into between those two moving averages. Soybean here, you can see it's pulled off, but it's in the green today. Crude palm oil at the top end of the range, going back to February even. Chuck Penner just talked about, you posted this on X, the Canadian prices index, just for the different commodities. You might want to pause and have a look at here, but your pulses are in the bottom. Canola is actually price index closer to the top. But the other thing that he did post was the California protein meal price. So the soy meal price is, this gap is widening, and I think that's a lot to do with just the tariffs as well. And China imposes, in his comment, is China imposes tariffs on meal, but you can see the canola meal prices have been just keep on cratering. Here's your soy meal prices, and they're not good either, because you're going all the way back to 2016 when you're in these price ranges. Crude palm oil or crude oil, trying to get back to some of those lows that we made in April and May, with a lot of the Trump comments back there really pushed the market down, and we look like we're heading that direction again. Same thing with the Canadian dollar. It's pushing down. That's probably a target where the market might kind of hold. I'm not certain. So U.S. dollar index, it's pulling back a little bit as well, which is good, especially when you got U.S. traded commodities like soybeans and wheat. It's actually could put some added values to their prices there. Wheat market just continues to make new lows. Same thing with Kansas. If there's something that's going to hold it, it looks like the France milling wheat is kind of holding out and trading more sideways. Corn coming back to a cluster of those moving averages. It's got to get through those for you to be optimistic that we've got some upside there anytime soon. And here I'm just showing gold futures just continue to run with this government shutdown.